Welcome to Accounting on Automation, the future of modern accounting podcast. If you're tired of endless spreadsheets, mundane month-end tasks, and manual workflows, you're in the right place. This is the podcast where we ditch the busy work and explore how automation is transforming modern accounting. From solutions that reconcile faster than you can say pivot table to AI that gives you insights before your coffee cools, we're uncovering accounting's best-kept automation secrets. I'm M. Daigle, founder and chief automation officer of OTTO-MATES, a community for accountants focused on automation. Join me as we chat with finance innovators, tech trailblazers, and the occasional spreadsheet survivor to uncover how AI and automation are reshaping the numbers game. Because in a world of automation, the only thing you should be handling manually is your morning latte. Let's automate. Hey everyone, I'm excited to introduce my first guest on our Accounting on Automation podcast. Today, I am joined by Jason Berwanger, CEO and co-founder of Hubifi. And this one's special because it's the first episode and Hubifi is sponsoring the entire first season, hopefully more to come. So Jason, you and I have talked at length about all things automation. So today kind of feels the same in some ways, but maybe a bit more formal in others. So I would love to kick off today with just you sharing about your journey a little bit and how you got to where you are today with all the listeners.
Yeah, sure. And thanks for having me. And quick background, very much started on the corporate accounting side and kind of learned my chops, really a lot of like revenue recognition, a lot of basic close type of things, really got into reconciliations and then evaluation things. But I've spent a disproportion of my career working either for and on corporate accounting teams or leading from a fractional CFO perspective and a lot of accounting initiatives and ERP implementations. I also have a technical background leading engineering teams and most notably for Root Insurance back in 2020. We did an IPO, we did a NetSuite implementation. We needed to build a ton of tech in the data warehouse to like get ready and get auditable for that. So learned a ton and have pretty much been in this like either supporting accountants or being an accountant myself my whole career.
I love that. I feel like we have somewhat similar backgrounds, but I feel like that last one with the NetSuite implementation and all of that must have been a really great learning opportunity because all of the things that go into an ERP implementation are both challenging and exciting, but also full of learnings for sure.
Yeah, for sure. It was interesting too because I had done some ERP implementations and that was really the almost the zeitgeist change where ERP kind of changed what it meant. Where, if you look back 12, 15 years ago, there was like true ERP. It was like orders and subscriptions, everything go in, there's billing, cash, all the financials got created in one central data store and there was reports built. It was truly the hub of the business. And it's kind of my expectation when I had joined Root and also when I was starting to help with some of my fractional clients. And what I realized was no, that not because of a decision intentionally by accounting and finance teams, but more that there was a customer innovation cycle that had changed. And a lot of these ways that people paid or customers billed really moved to like a decentralized model. And so NetSuite ended up being the final destination, but the accounting team and I were very much stuck in between this ledger that we needed to get and compile information for and these third-party data sources. And it was very much a new perspective on, business landscape has changed quite a bit in terms of how, folks are contracted and billed. And it really changed how I thought about ERPs from that point on as well.
It's kind of where I sort of turned to technology as well. So back with like the introduction of recurring revenue models is where I got particularly interested for very similar reasons. Like ERPs went from being able to handle the very like build, ship, and invoice type of models. And then we kind of branched out and now we have usage and SaaS and subscription. And we've got kind of like every sort of different offering. So it's really changed the game, I think. And we call it like the great decentralization. Right? You've got payments and invoices and all of these different impacts on accounting. And, from your perspective, you're seeing this, right? Like, how do you think that shift from having everything in the ERP to then having subledgers and other ways of doing it, how's that reshaping the role for accountants?
Yeah, I think there's probably a couple really challenging things that have happened for accountants from what I'm seeing. One is, when you go from the centralized model to the decentralized, the folks who suffer the most are really the accounting and finance folks right in the middle. And because they're downstream of really the operational processes of the business, they're either looking at actual data and then trying to forecast from an FP&A perspective, or they're trying to actualize business performance. That's no longer in the place it used to be. And you have to go to a number of places and these all have different data models. That's put a lot of pressure on accounting folks from just a pure data, like what their tool set is, like is is, the amount of VLOOKUPs for 10,000 line spreadsheets versus 100,000 to a million plus, that seemed to have accelerated quite a bit with high volume transactions plus decentralization. There's a lot, not only in volume though, just in the compilation of, I've got a CRM that has a contract source of truth. I have a billing system. There's an internal system for usage. I then take payments through Stripe, Braintree, and oh, by the way, some folks pay us in other methods. And the accounting team has to distill all of these various business models. And the cash thing on its own isn't that hard. And so folks outside of accounting are like, why is this such a problem? Well, it's like, if you collected the cash before the contract, well, now that's just a customer deposit, which is a different treatment than if you collected it against a contract that's enforced, which is now deferred revenue. So you have to have the full order to cash context, but those all live in different places. And so that has disproportionately impacted accounting teams. And then on top of that, obviously, we've seen a shortage in accounting folks, both on the public side and the corporate side. So I think we've had less people, and the job has gotten a lot harder, and the data's gotten a lot bigger, and the data has moved from one place to 10 places. And that has not been easy for accounting folks to deal with.
Totally. Now, and this is something you guys handle, but like, how do you think about how all of those accounting teams, or maybe less accountants, more disparate systems, like how can these accounting teams like really solve for that accuracy, completeness, compliance, like across all of those? Because I know just from like having been responsible for those in the past, it can get really tedious, especially when you're taking them and then maybe putting them all together in a spreadsheet, God forbid. What do you see teams doing to try and help get around that and avoid some of those risks?
Yeah, well, I think the first thing to call out is the current situation is untenable. And as evidenced by, if you look at the PCOAB and the number of audit deficiencies, those have increased like year over year 25%. And a disproportionate amount of the issue is related to revenue and inventory, or cost of revenue. So I think the quick answer is no, it's not tenable. Like, accounting teams aren't getting the resources and headcount. If they do get the resources, they probably can't hire. And there aren't a lot of tools out there that actually handle the nuances of not only the disparate systems, but the never changing nature of accounting periods. And plus all of this, like, contract has to have payment has to have contract context. Those are really hard data problems to solve, and there ain't a lot of tools out there to solve them. So my first answer is I don't think it's going very well, just based on that. Like, how's the auditors of the auditor say it's going? Otherwise, I think there has been, there was a movement around, automation related to rules engines. And so this is really like RPA, and call it like automation V1, right? You had software for workflows, which is like a closed checklist that you can automate in a Flowcast. And then you move on to more of like rules engines, and you see folks like Workday, Stripe, even NetSuite with ARM, where you can basically say, hey, we'll enter in the information or import it in, and then you can set up some rules. But then the accounting team or now a financial systems role, which is really a more technical accountant, has to now manage these rules. And if there's contract modifications or if things change, now the accounting or systems folks are going and managing the rules engine instead of the spreadsheets. And that has felt like some benefit, but it's also just moving the problem to a different place. And I think that's also led to some of the audit issues where, at least when there's an accountant compiling it and then putting it into the ledger, they know that that's a known set of resources and rules and governing in Excel, and then they know their ledger. You enter in now this third-party rules that they're not GAAP rules, they're just systems rules that you're hoping you're implementing for GAAP. And a lot of times that's not the case, and they get called out, and then you have to restate prior periods. So I think that was kind of like, you went from no automation to some workflow, and then you went on to rules engine. And I think a lot of the intention is now going into more like artificial intelligence and LLMs, but there's a missing story that's really happening that doesn't get talked about, which is like true data automation or deterministic data automation. That's part of what we're trying to do at Hubify, and how we help folks by connecting to these source systems and saying like, hey, if you have Stripe, Apple, Google, or data warehouse, we can actually connect, identify the contracts, we link them all the way down to your payments, and we have accountants actually be able to configure those things without managing hundreds of rules. And I think right now there's not a lot of marketing, there's not a lot of talk happening around that type of automation because LLMs and AI has been so dominant in the news cycles. But I think there are very real investments that folks are making that have been improving those teams. And that feels like what the next big step is for accountants. And because I think we'll touch on this in a little bit about why LLMs and AI really aren't what's going to help with this type of problem that accountants have.
Yeah. Well, and I think you're right. And it's interesting because this shift that we've seen over time, because you're right, RPA, rules-based engines, they are helpful, but they are still rules-based. So they are still, I'll say, hamstrung by some bit of code, right? There's something that is going to be reading the data, and the data needs to look a certain way in order for those rules to work. And AI is now like kind of changing the game there a little bit. But maybe if we talk about the data piece a little bit more, like you mentioned it a little bit there, but curious like how you're thinking about tying all of that data together and how do we make that work upstream so that when we do implement something like a solution that is rules-based or even AI or something like that, like how do we have to think about data differently now?
I think that what you highlighted is part of the problem is when the decentralization happened, the requirements that a finance and accounting had for modeling what a contract was for 606, and then how to think about like billing and, if you have like unbilled revenue or revenue that you're billing that you haven't done, it's just a receivable or payments, disputes, all of these different financial events. What we lost was this interrelation of these things in a financial ecosystem of order to cash, and that the whole thing moved into different pieces. And so I think the first thing that folks need to, and the folks that have started to solve this, say, hey, we're going to intentionally model this as like, here's our contract source of truth. Here's our invoice source of truth. Here's the payments. Here's disputes. Here's cash in transit. Here's actual disbursements of payments. Then you have fees and or cost of revenues. And you put a big bow around that, say every one of those has a very distinct data model that needs to support it. And we're now going to pull that into a central place to where we can interrelate them so that at the very least you can start to report on with contract to cash context what an accountant needs. And at the very least, the folks that I've seen that have done a good job solving that have at least worked their data teams to take that first step to say, I need this data, this data, this data, this data, and I need the context of how they interrelate. Most folks, though, I think don't get there. And it's hey, we're just going to sync this into a data warehouse. And okay, now you have a report. But then you start to hear things like, well, January's numbers, I reran them and they changed. And okay, so now we're not really taking the mutability or the immutability requirement of accounting and saying, no, you can't change prior accounting periods. That's an adjustment. And so now trust gets lost. But folks that both can start to change data, capture that and say, no, this adjustment belongs in a period. And you can interrelate those objects from a data modeling perspective, whether you have a tool that solves that, or if you have an internal team that does that, or if you just have a set of spreadsheets that do that. If you do that step, you have a chance of being successful and doing it right. And so that's really where I see folks stepping, at least in the right direction when they're investing in that type of project.
So talk to me a little bit more about that, because I think everybody listening is probably like, that makes sense. Is that something that you see folks doing on their own? Do you see them working with like consultants? Like what do you think would be the best way for folks to kind of like think about handling the data a little bit differently? And I can just quickly say from my experience going into some implementations, we did a lot of data cleanup was sort of like the term at the time. We would spend a gross amount of time trying to clean it up. And then it still wasn't clean, right? There's always something that is an error, an anomaly or something. But like, how do you kind of see this new way of taking data, identifying where it's coming from, and then giving it context so that then when you do pull it all together, it makes more sense and you're not necessarily having to go back and rewrite or clean up all of that data that's already been there?
Yeah, no, that's a good question. So I think the first key is accounting has to own the governance of the data. They understand the context that's needed and the compliance requirements and precisely how to define those things. I think that there's probably some work to be done where there's a lot of data teams that exist that go to support accounting folks, and they're the ones kind of maybe managing that and translating from accounting teams. I think really the accounting team should own that governance and the definition of some of those metrics, measures, etc. That's a good first step. Then you now can apply that to the actual data sets themselves. And so now this becomes a data calculation and processing issue based on the governance of accounting. And some accounting folks, they're picking up the technical chops to do that themselves. They're like, I can write a query, I can pull a report, I can now start to actually calculate some of these things myself because I've said, hey, I'm documenting what this is. And now I'm going to look at the source data and interpret that in a way consistent with what those data governance measures are. And so I think that's like the number one thing that is challenging if your data team owns the governance aspect of that. They probably shouldn't for the key measures. And if you think about the key measures of like revenue of the company and how it's performing in terms of contribution or gross profit, then those are really like the baseline data things. And I think there's been a finance and accounting more broadly owning data, at least the data governance thing. And I think that's really important because then it sets it up for the right type of service model. Because I've been in the same seat where as a technical practitioner, I worked with some of the insurance accounting. I know GAAP very well. I don't know insurance accounting. And for me, it was like, we really need to define concepts like reinsurance and, principal versus agent things and how like GAAP versus stat and insurance are different and how they're governed. I don't have an expertise in half of that. So let's define these and make those scenarios. And then I can go build to the spec as a practitioner on the data side to help the accounting team get what they needed. And that worked a lot better because I wasn't the right person to govern it. So I
Yeah.
think that's definitely the big first step that folks need to take that will set them up for success in that way.
Yeah, and I think there's something too to accounting owning the measures as well, but also then you've got these cross-functional teams in bigger organizations where you do have to bring other folks in, but I think by setting those measures up front, it's very clear what the outcome is, and then everybody, even if they don't have that technical knowledge, or I should say accounting technical knowledge, at least if you've given that context around what those metrics need to be and what, how you can measure that, then at least, the accounting folks can go back, do their day jobs while the data team might be able to go through and try and figure out some of the data mapping and stuff like that,
I
which
think
is
you
good.
nailed it, by the way. I think
Yeah.
that is the value prop that does not get talked about enough. If you
Yeah.
do this and you invest in it right, and accounting is governing that data, and the calculations are now automated in a way that accounting says, yes, this is us, this is the sort of truth. You take that post-process data and you share that with the organization. Every time I've seen that happen, it benefits dramatically the P&L owners, the bottom line, because now it's like, they're using the right data to make what are the right decisions versus trying to make the right decisions without the right data before. And it's pretty dramatic. And I don't think enough folks do that because it's a really hard thing to measure, but it is pretty dramatic when you've seen it happen. And it helps the accounting team dramatically as a business partner as well, because it's, hey, we have questions on this and we want to prove this. And now we're talking about levers. Well, now you're bringing those strategic folks in, and accounting is now elevating their role from compiling those journal entries to, no, we're just governing a set of data and answering critical questions about what do we do in the operation and how's that going to translate into the financials? Who better to answer that question than the accounting folks? But if you haven't compiled journal entries all day, you'll never do that.
Exactly. And I think too, with implementations, there's always this focus too on like ROI. You're putting money into it, you're investing in a solution, often comes with services associated with that. Like that's costly. But I think if you end up setting up a really successful outcome, then your ROI becomes increasingly stronger just by way of going through the right steps and the right outcomes, rather than, okay, we're going to put in the system, we do steps 1, 2, 3, 4 today, so we're just going to automate steps 1, 2, 3, 4 tomorrow. It doesn't make sense, because a lot of times those steps that are there for the manual purpose are because it's manual.
Yeah,
When
precisely.
all of that doesn't even need to be considered. It's sort of like a revamp of how you do everything, data, process, all of that. So
you nailed it. And I think one quick thing that you said earlier too, and talked about like bringing in consultants and those impacts, that's definitely a pattern that I've seen, where when you bring in the consultant, the first thing they do is we're going to look at your current state and map it out. And then if you use that as your roadmap, that's very dumb automation, because you're not using any critical thinking of your accounting and finance folks. And you're basically just lining the consultant's pocket going, great, we'll do this. We'll have to take all of your rules that you did manually and replicate them in the ERP or in a data system. And that's an outcome where like that dumb automation will never lead to transformation. It will make your consultants rich. And there's a time and a place for bringing in people that know more than you. But I think most folks get abused by that. And that's, I think, a lot of why those statistics around ERP failures being 75% plus is a combination of the decentralization, and the other half being consultants are just coming in going, well, let's document current state and that's what we're going to automate. And it's not really automation. This is kind of like a dumb, I'm going to make the process the same that it was, but with less button clicks. But the value is greatly diminished in that sense.
Exactly. And I think what I would say too to anybody listening, find the consultants that are thinking about process optimization while going through the implementation and that discovery process of what does your as is or your current state look like. I think the to be and the future state is where all of the value really comes from, to your point, Jason. So, there's some really great consultants that do that. So I would just encourage everybody to remember, like, as you're looking for that help, and it can be really helpful, just look for those that are looking for the transformation aspect of it, and not just, oh, I do these things today, and so I need to automate them tomorrow. There's always a better way to do that. So I'm really excited to get into AI. But before we do, I'm curious your thoughts on like around the idea of decentralization, and now like ERPs, we rely on all of these other systems now. Do you think ERPs are going to adapt to handling more of those complex or, decentralized activities? Or do you think they are going to remain traditional and as they are, and we're going to have to figure out a different way to like figure out what a true single source of truth looks like?
Yeah, I think that ERP, as we thought about it 15, 20 years ago, like even if you look at NetSuite, which is, I think, still considered a modern ERP, it's almost 30 years old, I think, at this point.
I think it is, yeah.
And so like they were all designed around that centralized model. And the bet I would make is like, if you look at internal controls versus customer innovation is very likely always going to win out. And because the organization are going to choose to serve that net master of overall, as they should, because that's their end customer. They need to keep happy. So I think what that's going to do, though, is, and already has done in many ways, is manifest with all of these decentralized tool sets. And it's not really a best in breed versus ERP. It's really a customer innovation versus like internal control. And I think that's what's flipping the model on its head. And I think you've seen ERPs attempt to become more modern and add in tools and do things to try to actually be more on the data management versus like, hey, you're doing your process within the ERP. I don't think they're going to be able to make that pivot, though, because their core design was around everything is done. But I don't think that means ERP is going to go away, because there are plenty of business models, even very modern ones, that are, hey, we're going to place an order. There's got to be context and or an import that happens. And then I need someone to bill. I need someone to look at the collections. A lot of these B2B business models that aren't going anywhere still need ERP. I just think that there's a new set of companies that are being founded, and they're really focused on serving directly to the consumer or serving at high volumes businesses. And they're doing so with these best in breed from a customer innovation perspective system. And that's shifting this paradigm in a difficult way for the accounting teams. And that's partly where we're putting ourselves in the middle from like a Hubify perspective to say, hey, we'll connect to those decentralized systems, still let you set up what you believe to be the configurations you need based on your accounting policies to automate this thing, make FP&A happy, you're compliant, it's all reconciled. I think that's a key value prop because of the fact that customer innovation ain't going backwards. Like that's one thing you can always bet on with all things in marketplaces is, once you give something to that customer and they like it, you're never going to stop giving them contract and payment and invoicing flexibility. We're never going back.
Exactly. And I think that's part of, coming from like Zora, where it was the subscription economy and trying to figure out like, how do you sell best and how do you provide flexible ways in which you can keep selling to how your customers want to buy. But to your point, like nobody's going to turn that around and be like, well, my ERP can't handle it, so you're going to have to buy from me this other way. It isn't going to work. But I'd also be curious your thoughts on some of so it's funny, the barrier to entry is getting lower and lower for new solutions popping up. And I think from my perspective now, and being able to meet so many new folks that are coming up with new solutions that are joining the OTTO-MATES community, which I love, but I'm curious your thoughts on some of these newer ERPs that are popping up too, because I'm seeing them more and more, and some of them we work with, but curious your thoughts on like how that might also look as compared to, our traditional SAPs, Oracles, NetSuites, and stuff like that. But do you have much in the way of experience or thoughts around some of those newer ERPs and what they're trying to do to create an ERP that is more tailored towards, say, an industry like SaaS or, like B2B versus B2C or something like that?
I have a strong opinion that the folks that are attempting to be NetSuite 2.0 are chasing ghosts. And I don't mean that in a disrespectful way, but it's really you're saying that the model hasn't changed and now we've built a better mousetrap. And that to me, like, I think you could probably get market share just by competing, but I think that's a shrinking market share and it isn't indicative of where business models have gone or are going. And so in that sense, like, yeah, I think you're going to see a lot of competition. I also think it's very necessary in the sense that prices from an ERP, and NetSuite is a good example of that, but from a price increase perspective, there's a growing distaste and displeasure of, I can't get the support I need an army of consultants, and hey, my XYZ contract went up year over year over year. Now I think that'll put pressure, and now there's going to be almost a race to the bottom for the traditional ERP. And I don't think anybody wins, though, is the thing. Like, I don't think the customers are going to really win because it's not an order of magnitude benefit to folks. You may get in, you may save some dollars and cents on your ERP costs, but you're not going to save 1% on your bottom line from this decision, right? It's not a meaningful impact on the business. It probably is on an accounting and finance team's budget, but it isn't a business level order of magnitude benefit. And so I think that's part of the next gen folks that are truly trying to replicate but build a better mousetrap are focusing on the ghosts of the past. I think there are some innovations that are happening, particularly in vertical SaaS, where you really deeply understand the needs of a specific industry and the personas and departments of the folks that work in that industry. I think there's been some great innovations there. And that future, I think, looks at folks that will take a more broad approach to automating and taking a specific problem and solving it soup to nuts completely, which is kind of the Hubify approach. And then I think there's other folks that are going to say, hey, we're solving this problem, but we're solving with the degree of specificity that it's multiple orders of magnitude benefit, not a NetSuite generalized 2.0, which means it is probably a worthy investment. And so that's kind of the way I think about it is, orders of magnitude benefit to the business is really how we'll look at who's going to win. And the race at the bottom, 2.0 ERP doesn't feel like a winning outcome for anybody.
I like that. That's interesting. Okay, so AI, I have to jump in. I'm like chomping at the bit here. So when we think about AI versus automation, maybe, so yes, AI can be a form of automation. But if we think about the data automation piece of it, and then these deterministic outcomes that we can make fully auditable versus more probabilistic, right? Like when you're using those LLMs, you and I have talked about this, but just for the listeners, if you're using LLMs, it becomes very difficult to create an outcome that is deterministic in the sense that you can create that same outcome every time. So curious if you can kind of like start us off here. I know it could probably be a whole episode on its own, but like how can this stronger demand for this deterministic data automation be addressed, like as opposed to this probabilistic AI model type of thinking?
I think part of it is where the mind share is in the hype. We have to let this play out, right? Where folks are really focused on that. And it's clearly a bubble at this point where we're now over promising, what we can and can't do with this.
Mm-hmm.
And so, but part of that I think is also just educating folks in terms of at the end of the day, it seems like a magic thing, but there are very real problem meets solution ways to think about this. And we talked about this a little bit earlier, right? There's the manual process. And then now you have workflow software, which is mostly what B2B SaaS is made up of, is you're looking at things as a process that moves through people and approvals, and then you're able to visualize some outcome. And then you actually get into like the, RPA. I'm going to take what you have, but I'm going to say, okay, this is deterministic. So I'm going through the same processes, but it doesn't assume you've rethought it. Now there's like real automation, which is saying, hey, we're actually going to grab data from a bunch of third parties. And it's not 200 rules that are running consistently, but we just know these third-party systems and all the incarnations in a way that we can now pull that together in 6 sources and say there's really thousands of different, if not tens of thousands, incarnations of records, but still get them out in a deterministic way. That's where I feel like the next frontier is at, but we're not really talking about that. The ironic thing is that the interrelation and the clear association of order to cash data, for example, is actually the prerequisite that finance and accounting needs to happen before LLMs will actually be valuable. And really what I mean by that is like, if you think about where you can apply an LLM, you said it best, you're thinking about probabilistic. I want to get a range, right? And so if you had a very clear set of all your customers and all your revenue over time and who paid, who didn't pay, and a way you could train an LLM on that, you could ask it questions and get sensible answers that wouldn't be to the penny or the dollar, but it would be generally speaking pretty correct to understand what's going on. And at the same time, though, a lot of these LLMs are not only built for probabilistic, but stochastic. And so there's a randomness to the responses in many senses around giving the perspective of who they're talking to versus just giving like a very specific probabilistic range, which isn't a perfect fit, but could be depending on how you think about it. But neither of those feel like the right solution from an accounting perspective. And the accounting one is interesting, and you mentioned it, and I would say there's really 2 things that are important. 1, the provenance of the data, and then 2, the lineage of the data. And so accounting folks we're talking and saying, hey, this needs to be auditable. Well, those are really the 2 data requirements it has to have. The provenance, like what was the origin of this record? And then how did it change over time before it got here? And if you can answer those 2 things via a solution or a spreadsheet or anything, you can pass an audit and you can feel good that you got the right numbers. And to me, that's the core requirement for most accounting use cases, where there's a record at a point in time that you can determine, although you may need context from other points in time data, you can determine exactly what the right treatment is this thing. And then that data set you produce is the data set you train your LLM on. And to me, that's what's 5 years from now look like. That's probably what it looks like, where we figured out and been educated that the investments that we need to make are getting that well-associated data set to then train a clean LLM on the data. You've automated your actuals, you've now benefited your accounting and finance and your business partners, and now you're able to reap the benefit of that investment. The problem is that that's a really hard thing to solve, and it's decentralized in nature, and it's expensive, and there's a lot of work just to getting that project off the ground. So everyone's focusing on what these outcomes could be, but they're blocked because you can't then use AI to solve that, because the minute you ask AI to say, hey, how did you come up with that? Or why did you code this? Or now you're spending either more time trying to correct the LLM, or you have to be okay with a range and frankly some stochastic outcomes that are just random. And none of that seems tenable to the actual required accounting work.
Yeah, there's something to like, there's so many regulations around financial data, right? And so those are all the rules that we know, gives us job security. That's why we're all here. But there's this scrutiny around that financial data. And I'm curious your thoughts on like how companies can think about ensuring some of the auditability and maintaining that auditability of automated processes, especially like when I think about starting to introduce AI, and I may be going a step too far here, but I've had conversations like, what does this mean and how is it going to change audits? Like, how is this all going to start playing out? All right. Because today, auditors are going to make folks, those who are responsible for the financial data, they're saying like, we didn't rely on AI on the whole, to be able to present these financial findings or this financial data. But like, at what point do we start saying like there is a material AI influence on that data? And like, how do you think about that? Like, how do we protect that auditability of it?
Yeah, it's an interesting question. And I think the right side in terms of the audit themselves and the auditors and CPAs it's a different impact and level of like both accountability and responsibility than it is from the corporate side and the controllers and the folks that own that. And on the audit side, I think there's probably sooner rather than later some potential benefits to some of these things. And like when you think about doing samplings and then you're looking at the samplings and walking them back and looking them up against a corpus of, hundreds of thousands, if not millions of records, there's a lot of audit tasks that you could say, yeah, this is actually a really beneficial way to find outliers and how material those outliers are within a range, which is the same thing that a human being is doing when they perform an audit. And so those probabilistic outcomes actually align a lot better, in my opinion, to interpreting some of that data and then coming up with a probability whether it's right or wrong. And I don't think we've seen a ton of impact from the CPA firms taking advantage of it, but that feels like one of the next things that when they're smart, they're going to find a way to take advantage of that. Now they have the added, complexity of you can use the AI all day, but you're still responsible as a CPA to making sure it's correct. So to what degree do you validate? We're in the same paradigm we were with the rules engine. If you automate with the rules engine, that's great, but now you have 200 to 2,000 rules that you got to audit, and how do you know they're right? Well, you're still responsible. You're still responsible for the AI side and what the LLM produced. So I think that's the story on the audit side. On the accounting side, yeah, I think you nailed it. Like how you get there, if you can't prove how you got there, of what use is the information? And the answer to that is not very much. It's not useful. There's no value in it. And so until there's a way to continue to capture that provenance and lineage in those processes, you're not going to get there. And this is not an LLM thing. This is actually like a core data thing. I mean, most data tools, BI tools, data warehouses we ran into, like you don't have a great mechanism to protect the immutability of mutable data. And that's where a lot of the tech we had to build at Hubifi has never been built before, because you can do anything on the operational side, and then you need to apply a bunch of these really specific rules to both the data and the journal entries, and then never let them change history. If it does change, well, then you got to capture exactly what changed at a point in time and make an adjustment for someone. And if you don't do that, there's not really any automation benefit, because then someone has to do an inception to date. What did I say last time? What is it now? And I'm going to diff them and book the journal entry to see how they could build trust, because they're accountable for that outcome and that organization adhering to that compliance. So I think more broadly, like that's because the problem is so complicated for corporate accounting, but that's also the antidote to the lack of trust in data, where if you rerun a report from January and you rerun it in March, you get a different answer. I actually don't think that's just an accounting thing. Like any report I've ever looked at, if that happened, I probably will never look at that report again, because now what do you mean to do with this? I no longer trust it. That's my 2 cents in terms of like how I think both the audit side could potentially benefit, but still have to find a way to audit the tool they're using to audit. And then I think the trade-offs for the accounting folks on the corporate side.
Yeah, I like that a lot. Kind of thinking along the same lines as like real world use cases, because you gave one as far as like the sampling on the audit side and what that could do and how that could benefit. Like maybe it's at Hubifi, maybe it's at some of your customers that you're working with, but can you think of any real world use cases where automation delivers better results than maybe like some sort of generative AI, or vice versa, right? Maybe generative AI provides better results, like in your example on the audit side for sampling, for example. Can you think of any that you guys either, like I said, use at Hubifi, your customers use, or that maybe even in your own personal finances?
Yeah, no, I know it's a good question. The easiest one is if you look at something like Stripe. Stripe is a very ubiquitous tool, and we have a mechanism to connect to, essentially Stripe's got about 28 different endpoints of distinct financial transactions. And then when you interrelate them, they're in the thousands of potential incarnations of records and journal entry types. And what we're able to do is connect to that, figure out what happened at a point in time, and then say, well, we're going to track how that stuff changes, because that has an impact on the journal entries. That's just the how do we book activity, though. There's another layer where we say, okay, let's take the data that we saw from Stripe before we did anything to it, and there's a check, and now there's a match back to the post journal entry automation. Then there's now a third check back to a Stripe view, which is the operational view of what happened. And so cash in transit is actually a really good example of this. Your customers they've now paid Stripe, and it's sitting in Stripe's bank account. There's also then fees and disputes and all these individual records that are happening. And And that eventually comes into, it is basically a backlog of things that hasn't been paid out, which eventually then becomes a payout. And that payout is made up of millions of these records and, diffs and things like that. And so because we're able to both track the activity and then the actual totals we use to get in there and then show the grand totals in Stripe, we get this like sought after three-way match, which is the data we use to automate, the output of the automation, and then the actual third-party source data. And we can now wrap that into here's how you can do this in a way that manually you can't really do that because you don't even have access to that stuff without the API or change data capturing every record. You may have just the Stripe report, but you can't do anything with that you need to do to build the trust. So you have to have all three. Otherwise, I think on the LLM thing, when it comes to reviewing like large sets of data and like finding exceptions where you don't have to deterministically pick it, we use those things all the time at Hubifi. We use that. I think our clients use that and pull exception things where, let's say there's a composite reconciliation that's off by $10 on 10 million.
Yeah.
Okay. Well, a lot of times we can identify the record that's off. Let's say we can, and it's just off. Well, a really easy way to do that is to run that through an LLM and say, hey, I want you to find the one that doesn't match, because it's now just, okay, I'm going to go and match up all the rows. And I think that's a great way to do it. But we've also seen that go sideways where, for cash recs, you get the same amount on different days for different vendors. And then the LLM produces the wrong cash on the wrong date, which goes back to the thing we talked about earlier, where, we can automate 99% of the cash rec, but then there's a cash accountant whose full-time job it is to go double check the thing and then fix the thing, and takes them just as much time as it did originally. So I can't see I've seen a tremendous benefit from the LLM usage other than helping things from a process perspective to be reviewed where the outcome isn't something that you're actually accountable for from a compliance perspective. It's probably well used. If not, then you're going to now just have somebody review it for accuracy and spend just as much time.
Yeah, I think of it as, and I've said this many times, people have probably heard me say this, but it helps me find the needle in the haystack. So instead of searching through everything to find all the needles, it just gives me the needles, and then I can go figure out what I need to do with those needles as opposed to spending the time first finding them. So
exactly. As long as that needle isn't the antidote that you need to live or die, it's good to use that. But if it's your career on the line, maybe not so much.
Exactly. That's a really great point. Okay, so thinking ahead, because I always love talking tech stacks here, how can should accounting teams think about building a tech stack that combines the right levels or strength, both those deterministic automation and then maybe AI, just so that like you're getting the maximum efficiency out of everything operationally, but you're also still making sure that it's reliable, it's consistent, it's auditable, like all of those things. Like, how would you think about how accounting teams should attack building that perfect tech stack?
I actually just had a conversation with a high growth company going through the same thing. And I think the default answer was you need to start with the ledger. That's how the conversation began. At the end, though, the ledger got prioritized almost dead last. And part of that was interesting because what folks are thinking about now is like, what are the trade-offs and value props and what do we really need to support? And because data is now not in the ERP and now what used to be a very clear trade-off of benefit, a lot of these folks are saying, well, we're going to go from top to bottom in terms of trade-off of value and risk. And we're now going to create a measure of what we want to solve first. And disproportionately, if folks don't have revenue figured out, that's the thing that you got to invest in. That's going to be your pass off to management, what they're going to care the most about. That's the lever for the business. That's also, we've already seen it with the PCOAB, like that's the biggest risk from a compliance perspective. So you're 3 for 3, you need to tackle that. And so really that top of P&L, that we're looking at gross revenue. That's going to be number 1. 2 is obviously going to be cost of revenue. Really think about like getting to a gross profit and getting that solved on your P&L is going to be the most material thing. I've seen a disproportionate amount of folks where we're starting to work where they had very sophisticated systems and things around expense management and accruals and a payroll integration. And they took a report from their data team for revenue and they booked it. And they were like, yeah, people always ask questions about that. And we go, we're not really sure. We just booked this report. And well, that's why there's a lot of compliance issues with some of these things because they're now blindly relying on something from the data teams are governing and they don't know how to actually calculate revenue to the complexity needed. And then now you've created an issue. So I think stack ranking those things is the best thing that you can do in terms of value to the organization, the compliance risk, et cetera. And then you work backwards from there. And if you haven't solved revenue, that's usually very likely the number 1 thing. And then you work downwards into, okay, now I have P&L owners or departmental owners. How do I now put something in from an expense perspective that both helps us to manage how expenses are getting approved and how we're codifying them so that way we can manage our business? Probably the second lever you can pull. simple. And then now you're getting into tax. You may have a special tax situation, sales tax. You may need to figure that out because now not a ton of business value, but it's a huge compliance risk. And then last but not least, all right, now let's put this all together in one place in a new chart of accounts and a new ledger. And now we can get the benefit of that. Usually that benefit is only there too if there's a way with that ledger to do multiple financial reporting views where you can have a management view, et cetera. So if you do all that work on a ledger just to get a real new pretty ledger, but then you can't have multiple instances of the same report, you probably didn't add a lot of value and you're just putting entries in a different place. Because those chart of accounts are ubiquitous and they're cheap as dirt now. You can get them anywhere and or I should say a new ledger, not a chart of accounts.
Yeah.
So that's kind of what I'm hearing and seeing from folks as they're investing, and both from frustration from people that went with the full-on NetSuite in thinking they're going to get an ERP, but then don't, and they're really frustrated, or the folks that are thinking about it before they make the decision and doing the stack ranking going, yeah, our biggest risk, our biggest value, our biggest pain point is revenue to cash. Do that one first and then stack rank it. But again, that's what I hear partly because of where I am at Hubify. That may not be the case. The point being, though, work backwards from, those measures of risk and value for the org and then prioritize that first versus going straight to the ledger ERP. Like the old phrase, like nobody gets fired for putting in SAP/NetSuite/ whatever. Like, I don't think that's true anymore. I think you can burn a lot of time and effort and get nothing better for your business, and you're held accountable for it.
It's so interesting that you bring this up, and I love the way you just walked through it. And I think it actually does two things. One, proves what a lot of folks have thought of otherwise, and I was very quick to jump on and agree with right now when you said starting with that ERP or the ledger. But two, kind of brings this conversation full circle too, because it's starting with that outcome and figuring out what you need from a data perspective. I think too often we think, oh, start with your upstream data so that by the time you get to revenue, everything is set and clean. But in actuality, you're right. Like, unless you're setting those outcomes to know what to do with the upstream data, you're going to potentially get down to the revenue piece or, further down in the process and need to rework that data. So it almost makes far more sense to start at the end and then work your way back so that there isn't this level of rework, which could potentially have a longer term and more costly impact without even really kind of thinking about it.
Exactly.
But just knowing like there's all those iterations after the fact. And then who knows, maybe there's iterations on that because it changes something upstream that you also hadn't thought about. So very, very interesting. And now I love that I'm armed with that sort of like thought process as well going forward. Okay, so more on data, because as we think about AI initiatives and adopting AI, how do you think about where finance leaders should prioritize some of that foundational data automation before driving those AI initiatives? Like it's probably right in line with what you just talked about, but like, is there anything from an AI perspective that would change any of what you just kind of like walked through, or it does the same sort of hold where you've got that, what are your outcomes? What are you attempting to do? And would any of that be changed by AI, do you think? Or would it all kind of stay the same?
No, I think it's a first principles way of thinking that you can't go wrong from doing, and it stops or at least de-risks you from going down the shiny object. I'm hearing a lot of buzz. I'm getting really excited, and then how are we seeing value out of this? And that's not a fun place to be 6 months, sometimes 18 months later. And I think there's a lot of that right now where there's this mandate to use AI wherever you can, and there has been some absolutely transformational stories out there. But at the same token, some of those transformational stories that were that folks are sharing, I think Klarna was one of them, where it was like, the deprecating Salesforce, and the CEO came out and he clarified, like, we spent years building a data infrastructure and getting everybody to centralize and interrelate their data before we ever did this. And it's like, that makes sense. I was very skeptical. And then as soon as he said that, I was like, yeah, that's exactly right. And that's what folks have to internalize, that, hey, it was never about the reduction in software spend. It was about the value of data. There was no value of data if you couldn't have clear associations and interrelations, including being able to do the LLMs as a prerequisite. So no, I think it's first principles. The same thing applies. And there's a hype train where it's, you're going to get to the top of any, what do you call it? Where there's a bubble. And I think that bubble's going to pop. And then we're realistically still going to see a huge productivity impact from AI, but it's on a trajectory now that right now is 90% hype. Not to say that there's something value there in the long term. We should ignore the disruption, but right now we're very overvalued on our perception of AI.
I would agree. So once we kind of overcome this though, and we have kind of taken care of some of these, I'll say, deterministic data challenges that we have today, what do you think are some of like the biggest areas that accounting and finance stand to gain from AI? And like, how can we prepare for that now, or should we?
No, I think that's a really exciting thing for finance and accounting, and frankly, folks that, in management and the business partnership with finance and accounting is going to dramatically change. And because now you're going to take some of the best folks in terms of actualizing, and they're going to go from compiling to having these things be automated. And now they're a business partner for their management team in a way that they've never been to. And again, those are the best people in the building at saying, here's an operational thing that happened. How does that translate into a financial performance and output? And that's going to be super exciting. Now you're going to have FP&A folks that used to spend their time waiting on the actuals from accounting and then having to redo, and this was when I was an analyst, this is exactly what I did. I used to redo the P&L and I built it into 6 segments. Wouldn't exactly tie back to the original P&L, but close enough that we could, use to see where we want to spend some time optimizing and forecasting. And that's mostly where I spent my time before I got to how do I find value in this data? Well, that paradigm, both of those shift. When you've solved the interrelation of data and then now you have LLMs to help you efficiently be able to query and ask questions and get sensible answers. Well, now like a disproportionate amount of that is around how do we get value out of this data and improve business performance? I think is dramatically needed. We went from the, growth at all costs zeitgeist to like sensible and mature and, we're thoughtful about how we grow with a path to profitability, if not profitability being the goal. And I think those tools and that tech is desperately needed to help shift us there because we want to do that today. We just don't see a lot of folks doing that because they don't have the infrastructure that they've done. So I'm really excited about seeing that play out. I'm just skeptical that it's going to take a while for it to play out because there's a very clear prerequisite to getting value out of LLMs and any big data, and that's clearly associated, deterministic, well-related data. So
well said.
Strong opinion, but I'm sticking to it.
I like it. I like it. All right. Well, we're coming up to the end here. I would love to do a little rapid fire roundup, a little bit associated to what we've talked about, a little bit not. But what's one accounting process you wish was automated, but isn't yet, I'll say.
Isn't yet. I have yet to see a clear, no-touch payroll, full benefits, including accrual of days worked, automated into a ledger. I've never seen that working. That might work, and I might be wrong, but in my experience, I've never seen it, and it seems to be the most annoying problem ever. Because there's always like, well, payroll's automated, so you don't have an accrual. Well, you have an accrual, and I really want someone to solve that problem. It's not going to be me, but I would love to see someone solve it.
Okay, I love that. Challenge accepted. I'm going to go out and find one and see if I can bring one to you. One more question. If you weren't in accounting or finance, which I know you are all things right now with Hubifi, but what would you be doing?
I think that question has been answered in the, I really only know 2 things, and it's the accounting and data. So I would have to be in a data role supporting accounting and finance because I just don't know anything else. So I'm kind of stuck there.
All right. I like it. I like it. Well, Jason, thank you so much. This is awesome. Thank you so much also to you and the whole Hubifi team for sponsoring the Accounting on Automation podcast and also for supporting the OTTO-MATES community. If any of you are looking for help with Stripe accounting automation or high volume revenue recognition, visit hubifi.com. Jason, a pleasure as always. Thank you so much for joining.
Awesome. Emily, thanks for having me, and grateful for the opportunity.
Awesome. Thanks. And if you enjoyed this episode, don't forget to subscribe and follow so you never miss a future conversation on automation and accounting. And if you found value in today's episode, please share it with a colleague or friend who could benefit from the insights as well. We'll see you next time.